Welcome to Under the Basswood Tree podcast with Basswood Counsel. We break down the latest in tax law, cross-border deals, and M&A to help you build and scale your business with confidence. From international tax planning, developments in AI governance and regulations, to venture capital trends, each episode delivers focused insights you can use. Let's get started.
If you live, invest, or operate across borders, U.S. reporting obligations extend beyond just filing your tax return. Two regimes come up every year, and that's the FBAR and FATCA. They are related, and often overlapping, and frequently misunderstood. I'm Rudo Mugwagwa. I work with the corporate team at Basswood Counsel, advise on investment funds and their full life cycle, and that includes dealing with their regulatory compliance issues. Today, obviously, we're focusing on the FBAR and FATCA, and I'll be talking about the FBAR. Obviously, and in the tax preparation season, what are some of the things you think people should be doing to prepare to avoid some of these pitfalls around account verification, balance thresholds? What's your tip to people?
All right. So I'm Gina Lee, and I'm part of Basswood Counsel's tax team. The FBAR filing threshold is always going to be $10,000, and they look at the maximum value for the year, right? For Form 8938, for the individuals, the filing threshold actually starts at $50,000, and they don't necessarily look at the maximum value for the year, but then you can use the end of the year value. However, if you have foreign bank accounts and then you already have information on the maximum value because of the FBAR filing obligation, you might as well just use that amount for the Form 8938 filing requirement. So I say that determine the maximum value for each of your account for the year, and then see if you exceed the $10,000 threshold for the FBAR, and then $50,000 if you are filing single or filing jointly or separately, sorry. But then $100,000 is the threshold for the people living outside. So do it once. That will meet requirements for the FBAR and Form 8938. And then just don't think that filing one meets the filing obligation for the other. You have to file them separately because, like I said, Form 8938 is the form that needs to be filed along with your tax return, but then FBAR is a separate filing. And talk to your tax preparer. Tax preparer will not ask you questions related to this unless you tell them that you have foreign bank accounts. Often you might have dormant accounts that you forgot about because they were opened like years ago and then they don't have any balances. But you have to really remember, what kind of accounts did I have or did I open outside the U.S. And you have to tell your tax preparer. Otherwise, they will not know what to do.
That's the same for their FATCA, right? FATCA at an individual level. That you should, you definitely have to flag to your tax preparer.
And then the other interesting thing about FATCA is it's the U.S. that require all these foreign financial institutions to report about these accounts held by the U.S. people, but the U.S. is not required to report the same information about their citizens and residents back to their country. So it's kind of a one-way.
It's a one-way exchange that I think people talk about often. Of course, the rest of the world also now we see that people are participating in the common reporting standards, right? And that's how they sort of exchange amongst themselves. And that's so many countries now have signed on. And I think we'll continue to see the rest of the world sign up to the common reporting standard. As it pertains to FATCA or, in relation to the financial institutions, we know that even for countries that Model 1, most countries are Model 1 IGA countries. They've got their own local authority dealing with the filings, which helps because it means when you're now in tax season, if there are issues, you at least have a local authority, right? That through your service provider, they can actually help you liaise at a local level to address some of these issues that you may have with your filing. But that's different, right, for Model 2 countries because they have to liaise with the IRS directly because they don't have a local authority that has its own portal where they can submit these things. So the expectation is that they take that step because they have the direct agreement with the IRS to contact the IRS if something is wrong. So I think one of the big things in tax prep, in preparation for submission in March, for financial institutions to go ahead now, take the time to make sure, do we have all the information we need for every investor? Is it current? Are we sure they still live in America? Are we sure they're still just a U.S. citizen, or have they renounced any citizenship? It does. Make sure the certifications are done and complete so you are able to say so with confidence, right? Make sure that your policies are up to date and that your team is actually complying with them, right? Because that's another thing. If there is an issue, they're going to say, okay, what procedure did you follow? And if your procedure you follow doesn't align with what you wrote in your policies, that's a problem. Make sure, there's a certification that the responsible officer files when they sign this FFI agreement, when they register on the FATCA portal. They need to make sure that they recertify every 3 years. So making sure that they're getting their recertifications done. And in those recertifications, we know that they ask you to confirm whether there's been any issues, any gaps. And so it's very important that the FATCA programs are managed well, and that every time there's a filing season, you take that as an opportunity to check that everything is in order. And from our end, of course, we support our clients with making sure each step is covered. And we definitely encourage people to contact us early to make sure that their documentation is in order. We can obviously assist with submitting those reports as well. And especially for Model 2 countries, I think it's really important to highlight that we are able to support Model 2 countries. So whether you're in Japan, Hong Kong, Bermuda, if there's any questions, please feel free to reach out to our team. And I think the good thing is there's more and more information out there, and people are able to comfortably know they can find a pathway to complying, right? Because as things change, a lot of things change in the regulatory environment. At Basswood, we try to always be thinking of our clients to make sure they're always thinking of what's next, right? And that might just be a simple compliance issue, and us staying on top of it for you to make sure that you're always compliant or always thinking about the future of your compliance programs as well.
Yeah. So key takeaway, I would say, is, FBAR and FATCA have been here for a long time. A lot of the required filings are informational filings only. It doesn't have any tax implications. So make sure to review all of your accounts alongside with your foreign financial institutions, and then make sure that they match and then are reported correctly. And, as Rudo mentioned, early planning and early coordination within your firm or entity is key. And if you plan it ahead of time and handle it correctly, these filings are all manageable. There are some changes that might affect some of the filings, so remember to talk to your tax professional. You can talk to us. I think we gave you a lot of information on FBAR and FATCA today. Feel free to reach out to us for any questions, and thank you for joining us today. We were Basswood Counsel, and hope you have a great day.
We hope you enjoyed this episode. To stay up to date with the latest legal insights and Basswood events, please follow us on our Basswood Counsel LinkedIn page and visit our website at www.basswoodcounsel.com. Thanks for tuning in, and we'll speak to you next time.